Hey guys, welcome back. Today we are going to go over a simple topic for trading, but one that I think is really important. That's accumulation and distribution zones. How to understand them, how to play them with proper risk reward, and so on and so forth. So right now I've got the weekly Snapchat chart on, which, as we could see here, we sold off obviously with earnings, but we're using just a specific part of this chart, as we can see here. So what we're looking for when we're looking for accumulation and distribution zones is multiple touch points within a specific range, a range bound trading. And as we could see on this snap chart, we've got this very clear low range here, okay? And then we've got this very clear high range here. All right? And what shows with this is each time it gets to the high range, which we call this the distribution range, because we are expecting sell off here. So we're distributing shares, we're not buying shares. All right, so this would be our distribution zone. All right, and we want to make it a little bit like a box because it can vary a little bit. So we kind of make it a zone. And for this one, we would say that would be our zone. In fact, it could even be down to those wicks there. This is the zone I would consider our distribution zone. And our accumulation zone is going to be where we buy. We accumulate our shares, our option contracts, whatever it might be. So this is our accumulation zone down here. And what's great about this trading style is the risk reward is always on point. And what that means is this is a long-term chart. You could use accumulation and distribution zones on any time frame with day trading, so on and so forth. Like in a day trading aspect, if this was a minute chart, this would be where you hear people talking a lot about order shelves just above that wick high or just below that wick high, which is pretty much the same thing, just in a different light. And this is how we would play these type of charts. All right, so by the time this first area, we're setting up our actual zones. By the time we have a couple touch points, so here, and here, we've got a pretty clear zone at that point. So what we're going to do with this type of trade is we're going to look for the support pickup at the bottom, and we're going to look for the rejection at the top. And on a weekly chart, I would always suggest we take the open at the first candle above that accumulation zone, which would be right here. If we were to take a long trade off of accumulation zones, we would take it here up to our distribution zone for our target. So this would be our first entry and target area. And then we would also take accumulation trades here up to that target again. All right, so that would be trade number 2. And then we have trade number 3 right here, okay? So we have 3 different trades here they're very, very lucrative trades, all right? And how we would play the trades is the following, and this is why it's so lucrative to play accumulation and distribution zones, because we know where our stop loss is going to be. So we know if we take a bullish trade here, our stop loss is going to be the loss of our zone, okay? What does that show us if we do this over and over again? Okay, so I'm just going to clone the same candle. And we're going to move it here for the next one. Oh, I got to fix this one. So here, and clone it one more time. Here. Sorry, I just doing this really quick. Okay. So this is the best part of accumulation and distribution zone trading, is this amazing stop loss as long as you have a reasonable range. And what that means is this is going to be our target taking area. So our first target is going to be the top of the range. And what's great about this is those bonus areas, okay? As we break through a range, like right here, This is bonus target we're getting up through this area here. So on a trade like this, once we break through, we would cut the rest as we reclaim that channel. So in this here, all right, so obviously if we hit here as our high, we're going to close the final positions as we dip back into the channel. So the trade will be closed here, okay? And what that means is we've got this insane risk reward of what, 1, 2, 3, 4. This is like approximately right here. This specific trade is approximately a 6-to-1, a 1-to-6 risk reward, okay? So for just that first train. What that means is for every $100 we risk, we're expecting to make $600. And what that also means is we could lose this trade 80% of the time and still break even. If we took this same trade, 5 times at this entry candle here, and 4 out of the 5 times we stopped out because it broke trend, and it kept breaking trend, we can still break even overall on the trades if we win 20% of that trade. That's why it's not as much about these 98% win rates you see on this and that. Run the other way. That's all I could say about that. All right. And the rest is just a bonus on top of this 1-to-6 risk reward on a trade like this, where if we trim here, so this would be our first trim at the bottom of our zone. So for me personally, I'm trimming here 80% of my contracts right as we break into our target area. So 20% of those contracts, we're getting this bonus push. Okay. And then vice versa. We take the puts at this loss of zone. So right here, here's our first put entry down. Okay, so there's our puts. And then number 2 right here. Okay. But even here, we didn't retrace all the way. So even if we took a loss here and didn't take any profits all the way down and let it ride all the way back up, we still don't break our stop loss. So as long as we have the time needed on these contracts, we didn't break the stop loss here, and then we ended up coming down and hitting the trade. So right here is another put entry that was successful. So for what, and then right here, final one. Okay. All 3 were successful. And in this range right here, this is 6 for 6 successful trades here. And the same thing with the stop loss. The stop loss on this put is going to be right here. We break above our range high. Same thing right here. Stop loss is going to be as we break above our range high. And same thing right here. Stop loss is going to be when we break above our range high. So all of these trades have insanely good risk-reward profiles on them. They are backed by strong technical support. And they're backed by the algos, because this is algorithmic trading for the most part. And the bonus, the beautiful part of this is when it flips, we still can get in trades. So we were through this entire range here. We're 6 for 6 on the trades. So as we come into this range here, okay, where we're at right here, we broke bullish. That's where the trims are so beautiful. We trimmed here. Okay, this is where we trimmed. However, we still had 20% of our contracts left that we got this bonus on. So this final trade, we had our bonus all the way up here, which turned into what, a 20-to-1 risk reward, a 10-to-1 risk reward, just by trading support and resistance zones, like accumulation and distribution zones. And we have 0 in this specific model. We have 0 stop losses hit. So it's a combination. What's beautiful about these trades and what we really like about accumulation risk is a 1-to-6 risk reward. First of all, 20% win rate. %win rate ensures profitability. huge upside for additional profits with a clear understanding of where to cut. That's the thing. So on this trade here, if we trim as we break up, we understand exactly where to cut, where we're not giving it back. All right. So this is overall my very broad analysis of accumulation zones and distribution zones. The reason I like trading accumulation and distribution zones so much is because it is algorithmic trading. It's where we have orders stacked just below these areas. And more times than not, if we have an imbalance in trading, we're going to come back and settle that balance. And with accumulation and distribution zones like this, there's imbalances we come back and settle, which is where we're at right about now. So if we extend this out on Snapchat, we're back in that zone. So let's see what happens. What I would like to see on Snapchat is come back up, retest approximately $12, and see what happens from there. If we get the rejection on that retest, we could play it all the way back down to our level. If we don't, if we push back up, we know that right here, which was support, same thing as support and resistance, we know our entry is right there because it was resistance, 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 and now let's see, make it become support again. This was just a little lesson for you guys. I hope it helped, and I will